In today's video, we're going to talk about how and why you would convert your term life insurance policy into what's known as a permanent life insurance policy. And so with most term life insurance contracts here in Canada, you do have the option to convert it into a permanent life insurance policy. So in this video, not only are we going to talk about how you can do that, we're also going to talk about why you can do that. So make sure you stick around to the end to find those reasons out. What's up, guys? For those of you who do not know me, my name is Philip Setter. I'm the founder and CEO of Affinity Life, which is an online life insurance brokerage here in Canada, where you can actually view quotes 100% online and apply 100% online as well. So if that sounds interesting to you, I'll put the link in the description below and you can check it out. But without further ado, let's get right into the video. Okay, before we talk about how you can actually convert your term life insurance policy into a permanent life insurance policy, maybe I'll just give you a really quick recap on term life insurance versus permanent life insurance. So term life insurance, let's start with that. Term life insurance is the most basic form of life insurance. It's the most inexpensive, the easiest to understand. You can most easily compare it to just like renting a house. It's the most affordable option. It's used to cover you for a specific period of time. So you have different terms that are available with a term product. So you could do a term 10, you could do a term 20, you could do a term 30, you could do a term to 65. So you're really trying to pick a duration or a length that is going to cover you for the most crucial years where you would really need that life insurance. And so usually that's when, families are growing up, they have new kids in the household, they bought a new house, they have car payments, they have outstanding debt. And of course, there's partners in this household. And if one of them were to pass away, there would be a very large financial impact on that family. That's the main reason for term life insurance. Permanent life insurance, on the other hand, is totally different in the sense that term life insurance is really meant to cover you for that specific period of time, and it's a what if. Something may happen. But with permanent life insurance, it's not what if, it's when will something happen. So permanent life insurance is really meant to cover you until death. It's meant to be there until the very end, whether that be at age 50, age 60, age 70, age 80, age 100, whatever age it be, it's meant to cover you until the end. And now there's a few different types of permanent life insurance. We have whole life insurance as well as universal life insurance. And there's some minute differences between the two different types. And I made other videos about it. And if you're interested in those videos, just put a comment down below and let me know if you're interested in them, and I'll put them in the comments, no problem. But with that being said, permanent life insurance is really just meant to cover you until the end. So it's really meant for estate planning, paying off taxes at death, planning to leave something behind for the next generation, maybe your children or grandchildren, planning to leave some behind maybe to a charity. It's meant to definitely cover you until death. Now, here's a quick rant about permanent life insurance, and this is kind of controversial, especially in Canada here and probably all across the world, but you may have heard before, hey, maybe you should invest in life insurance, invest into a permanent life insurance contract. Instead of buying term, maybe you should buy permanent, and then you have this investment component. You need life insurance anyways, you might as well put some into this, and then you can use it during your retirement. Now, I will give my quick 2 cents on this real quick. For the vast majority of Canadians, I think this is a very bad idea. There's a lot of strings that are attached to this strategy. There's a lot of things that can go wrong. And unless you're already in a position where you've paid off all your high interest debt, you have your RRSP, and you have your TFSA max, I would not start looking at this strategy. So for the vast majority of Canadians who are in that scenario, I would say it's not a good idea. For the minority of Canadians who are in, let's say, the high income tax bracket, they're high income earners, they've maxed out other traditional investment vehicles, such as just a standard, very safe RRSP, then maybe it might be a good idea. And again, I made another video about that where I actually went apples to apples and compared an RRSP to an invest in life insurance strategy. And if you're interested in that video, just put a comment below and ask for it, and I'll put it there as well. But I would say, again, for the vast majority of Canadians, it's not the best idea. Okay, so with term life insurance, however, there's going to be the duration that you pick. So you might pick a term 10, you might pick a term 20 or a term 30. And at the end of your contract, a lot of clients ask me, well, what happens at the end? So let's say I pick a term 10, what happens at 10 years? What if I pick a term 20? What happens at 20 years? Well, there's really 3 options that you can do at that point. The first option is that you can renew that term policy. So baked within that contract, the insurance company will have rates that they will renew that policy at. So maybe for the first 10 years, let's say it was $30 a month, okay? Well, let's say after that 10-year period, you can renew it for another 10 years, but the price is obviously going to go up because now it's at that new age, and that's baked into the contract. You can see it before you actually sign the application. Your advisor, it should absolutely give that to you. So it might go from, let's say, $30 to $90 or $100, okay? But the thing with renewability, and by the way, not all contracts have this, so make sure you look for it, it's a guaranteed feature. So really the benefit of this is if your health declines over that 10-year period, if you have some adverse health conditions or other lifestyle habits or adverse lifestyle decisions that affect your ability to get life insurance or get a new contract at a preferable rate, then this is guaranteed. You could have cancer, you could have a heart attack, you could have stroke, you could get diabetes, you could have any of these adverse health conditions, and the insurance company is contractually obligated to renew that for another 10 years. They have to. It's baked into the contract. So that's the good thing about renewability. However, I would say in most times, if you're still relatively healthy and there's nothing working against you, I would shop the market before renewing your policy and just see if you can find a cheaper policy if you just went out and got a new one, because 9 times out of 10, a new policy that you get on the market is going to be cheaper than what your renewal would be from that existing company. Which leads me to the second thing that you can do, with this policy at the end of the term is you can cancel it. So, I mean, maybe you don't need the life insurance anymore. So, okay, you cancel it and then you're just done with life insurance altogether. Maybe you're, 50, 55, 60. You have your assets built up. You have some investments. Your house is paid down. Your car is paid off. Your kids are out of the house. I mean, it starts to make sense that you really don't have a need for that much life insurance anymore. In that case, maybe just cancel it. Or again, maybe you cancel it and get a new policy at a more affordable rate. That's the second option. Now, the third option, which is what we're going to talk about in this video, is you can convert that life insurance policy. So if you have a term policy, you can convert that into a permanent life insurance policy. Now, with that being said, not all insurance companies in Canada have these two features that I talked about. The first one being renewability and the second one being convertibility. So maybe I'll talk about that real quick just so you have a good idea of what I'm talking about. Again, renewability is that option to renew that term for another selected duration. If it's 10 years, it'll be 10. If it's 20 years, it'll be 20, regardless of your health, no matter what happens to your health. This is a very important feature that you should make sure your policy has before signing on the dotted line, because there are a few large insurance companies, and I'm not going to say any names, but there's a few large insurance companies in Canada that don't have this feature, and it's a very critical feature in my opinion, so make sure they have it. And the second one is a conversion. So with a conversion, again, you're then converting it into a permanent policy, and you're now doing it, again, regardless of what happens to your health. However, it's going to be at your new attained age. So for example, maybe you bought your term life insurance when you were 30, and then you're 55, and you're thinking, maybe I want to convert this into a permanent. You're not going to get rates of a 30-year-old. You're going to get rates of a 55-year-old. However, you can usually convert it. You can almost in all times convert it with no consideration of how your health is at that time. So if you did have any adverse health conditions, you could still convert it into a permanent life policy. Now, with that being said, if the insurance company that you are buying the term life insurance from doesn't have a permanent life insurance option or doesn't have very good options, well, you know what I mean? You can't really convert it into a product they don't have. RBC is not going to convert their term policy into an equitable permanent life insurance policy. That's not how it works. It needs to be contained within the same company. So if you are thinking about that as a potential option in the future and wanting to convert it into a permanent life insurance policy, picking a life insurance company that not only has a good term product, but also has good permanent life insurance products that you can eventually convert to down the road is very important. Now, why would you want to convert your term life insurance policy into a permanent life insurance policy? Well, here are my 3 main reasons why you might want to convert it into a permanent life insurance policy. Number 1 would be changes in your health. So if you had some type of adverse health conditions that did happen to you, let's say maybe you're in your 40s or in your 50s and some type of serious health condition happens to you, whatever it is, maybe you had a heart attack, maybe you see cancers happening, maybe there's some other type of adverse health condition that unfortunately you're having in your life, maybe you, have a reduced life expectancy, that might be a good time to consider, instead of trying to renew it for another 10 years at the end of the term, maybe it's time to convert it into a permanent life insurance policy. If you know that maybe there's limited amount of time and whatever health condition that you have, adverse health condition, is going to reduce your life expectancy, maybe at that time it might be a good idea to convert it into a permanent life insurance policy that you know is not, the rates aren't going to go up, they're going to be fixed, and you can pay the same rate, and then whenever it's done being paid for, you now own that policy. That's the first reason. The second reason is a change in budget. So one of the biggest things, again, for life insurance, for permanent life insurance, is that estate planning component. But like I did mention at the beginning of this video, or about halfway through the video, if you are part of that minority of Canadians that are the high income earners that are really, they max out their RSP, they max out their TFSA, they don't have any high interest debt that's looming over their shoulders, then maybe, you had a change in budget, you're making a lot more money, you have a lot of things paid off. Maybe now it might be a good idea to revisit that strategy of investing in life insurance. So a change in budget is the second one. And the third one is now you're really looking towards that estate planning goal. So maybe this could be age 55, age 60. Now you are starting to get a pretty good idea of what it's going to look like for the next 20 to 30 years. Are you going to have final taxes upon death? Do you have maybe a vacation home that you want to leave behind for your children, where there's going to be taxes upon that vacation home? Maybe you have some other gifts or investments or some other type of assets that you want to pass down, and there's going to be taxes upon death. Well, maybe this is a good idea to revisit your estate planning goals, and it might be a good time to then convert your term life insurance policy into a permanent life insurance policy. So to recap, those are a few of the reasons why you might want to consider converting it into a permanent life insurance policy. And don't forget, the policy is going to be at your renewed age, or at your acquired age. So at that point, if you get it at 55 or 60, it's going to be at that age. But one last thing just to remember from this video is not all insurance companies will have this feature. So if this is something that may be important to you, make sure the company has this feature and they do have a good permanent life insurance policy that you can convert it into at the end whenever you'd like to do that. But I think that's all I can say on this matter. If you guys have any questions, feel free to drop them in the comments below. And if you guys are enjoying this content, all I ask is that you give it a thumbs up, and I'll see you guys in the next one.